Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, August 23rd through Friday, August 27th, 2010. Well, folks, another interesting week last week. Again, coming off the turn date about 2 weeks ago now. You can see the turn date that we had announced to our premium members in the Research Center and in the Intraday Stock Chat, noted right here in the gold box. This again was August 10th, and going into that date, sitting up here into a master level right above the 200, we alerted our members that this would cause a change of direction and expect a drop in the markets. Obviously, as you can see, the market has fallen beautifully off of that. A 1-2-3 bar surge down, you got a little choppiness, a little bit of a bounce, and then a retrace back down. Now, the interesting thing about the daily chart here is we closed on this line right here. Now, what's so significant about this line? Believe it or not, it doesn't stretch back a long way. It's not a huge level. What really it is a note of this low pivot from the 12th. See how this market gapped down and then reversed all the way to the upside, creating this green candle? That was the low right here at 107.50 to 107.60. So, again, we're talking about the SPY here, 107.50 to 107.60. Now, again, the SPY mirrors the S&P 500. We are looking at the daily chart. So the key, again, that low, then you can see a little bit of a pause day, a gap down again with a tail, but again, the market gapped right to that same 107.50 to 107.60 level. Again, it moved off those lows, came up, had a little bit of a push up, pull back, little tails created, and then a retrace back down. You can see last Thursday, we came down touching that 107.50, 107.60 level again. And then on Friday, we were below. And by the end of the day, the light volume options X activity saved the markets. And we came in to have basically a small down day to flat day. NASDAQ was actually up fractionally. Dow and S&P was down slightly. And again, you closed right on this 107.50 to 107.60 level. So I think you guys are getting the picture. Over the last 5-7 trading days, this 107.50 to 107.60 level has started to form as a major level for this market on either holding it up or moving below. And what I'm going to say here right now is very important for the next week. If you close below this line right here, expect more downside. It's that simple. All right, so a close on the daily chart below 107.50 essentially, and you should see a move all the way down to this 105.85 level. This is the pivot low going back to 720, which is July 20th, 2010, and this little area here, as you can see, a definite key level right around 107.85 to 106 on the SPY. So again, basically early in the week, just start watching for that. If they can hold this, then going into the end of August, volume again is expected to be relatively light unless something crazy happens out of Europe or Asia or the Middle East. That again will be, if it doesn't happen, expect that light volume, and the markets could easily float higher into that Labor Day weekend. It's again a 3-day weekend coming up. The 6th of September is that Monday that the markets are closed, and again, leading up into that, volume should be very light. Remember, kids are still off from school. They're not quite back to school yet. A lot of the parents, traders on Wall Street, are taking long weekends. Even now, they're taking Fridays and Mondays off to be with the kids before the kids go back. And then once we get through that Labor Day session, volume should really pick up dramatically. But nonetheless, just watch your pivot points on this chart. That's what it comes down to. Believe it or not, it is that simple. There's not a whole lot of brain surgery involved here to understand if you can read the technicals right. Now, again, we're going to tell you in our nightly analysis videos in the Research Center, which again are 30 to 40 minutes in length, hardcore analysis. I give you swing trades. I give you levels. I tell you where the market's going the next trading day, where it's going the next 3 trading days, the next 5 trading days, and so forth. We're going to lay it all out. Now, I'm going to go to the intraday chart. What you're seeing here on the intraday chart really is the last 5 trading days. So we're looking back at last week, and I'm going to use this to kind of project out as well. The interesting thing about this last week, if you go back to the 16th of August, which again was last Monday, you can see that this is where we had that gap down to that key level, the 107.50 to 107.60 level, which again, by the way, was noted right on the daily chart right here. All right. Very key, this line, this right here, this is that candle right there. So you're looking at the same thing just on the intraday 10-minute chart. You have the long tail and then the surge up. Market saves it. Market goes higher. A little bit of an M top. We had a beautiful M top. For those of you that don't know what M tops are, they are bearish tops. Overall, you get an M top like this. Chances are you are going to continue down and form that M. And you can see beautifully up, down sharply, and notice how it's a perfect M formation. So these are key things that you have to be aware of, because when we saw this M top, it gave us a little bit of a heads up midweek that we could see some selling later in the week to the downside off of this beautiful little M pivot top. Sure enough, the market did dump. Now, in any case, as it fell back down, you came into this 107.50 level, 107.60 level right here, bam, bam, bounced off of it. Then you gapped down to it, pushed lower, went lower on Friday, but notice how they saved the markets again, bringing it back right to that same level. And again, if I zoom in, just notice this level right here at 107.60. You had it below, but it saved. And then again, intraday, by the end of that intraday session, and we zoom in, you can see it comes right up there, literally kisses it, and just holds right there into the close on Friday. So we really are setting up for an interesting week next week. We have a lot of economic news coming out next week that's going to be very interesting. We have existing home sales early in the week, durable goods, new home sales, initial claims, obviously jobless claims, which, by the way, last week were atrocious at 500,000. If you get a good jobless claims number where it bounces back to 475, the market will probably react positively to that because everyone's now thinking the worst. They're thinking, uh-oh, it keeps going up to 500,000. Next week it's going to be 550,000. 15,000, then 530,000. If they could have a drop back down to 475, you probably would see an initial jump in the markets, even if it is short-lived. Coming in later next week on Friday, GDP, our second estimate of GDP, that's going to be big for this market as well as we're continuing to see where this market is. Are we in another recession, again, a double-dip recession? Now, the key is think about why we didn't or why we got out of our last recession. Was it because the economy really, truly improved, or was it because massive government stimulus and Federal Reserve spending and creating of money and just pumping money into the economy? Unfortunately, it was the latter, and that's the scary thing about it because now the purse strings are beginning to get pulled tighter again, and we're going to go right back into that recession if we aren't already in. I believe we're already in it, folks. Obviously, the data is lagging when it tells us we are. We've already been in it for months, if not 6 months to a year. All right, so that's your intraday analysis portion of the SPY. And again, looking to next week, just follow that pivot. Follow the 107.50 level intraday and on a closing basis. If you can stay on or above it, the market could float higher towards the end of this week, especially based on the light volume getting towards that holiday. If you close below, you will go to 105.85 to 106 level and then possibly even lower. But the 105.85 should be a pretty significant short-term support. I would guess that there's a possibility we hold that at least for a day or two on a hit and probably get a good bounce swing trade out of it, or even intraday play would be a beautiful play off of that as well. Some other stocks to watch, folks. What are some big stocks for next week? Let's touch base on them. How about Chevron? Chevron's been very weak this last week. It really was one of the weaker stocks. It had been so strong. Look at this. Up in spirit of bull flag. See the bull flag? Consolidation. And up again. Now it's kind of down, and look at the bear flag. Sharp down, sideways above the 20, and then the collapse. This is going to be significant support on Chevron right here at around $74, $74.25. Again, right in this area, you will look for support. If it gets through this level, you have a high probability of it falling all the way down here. I do think this is going to be some support for a small bounce, though. I do think, again, the light volume, you have to figure, unless there's some crazy announcement out of Europe or Asia or something like that. And again, Europe, you're worried about defaults, countries defaulting on debt. You're worried about the panic again. Also, keep an eye on the dollar. The dollar's been a fantastic move. That's another chart you want to watch. Look at the dollar just over the last week, and this was, again, isolated by us. We went bullish right here, then we went bearish, and then again, look at the market off of the bearish pullback. Has a little small in spirit of bull flag. We isolated that and alerted people to it. And you can see up sharply, sideways consolidation, necktie underneath, necktie, very good support. That's telling you a pop is coming, and then a pop right there, right into a little bit more resistance. You'll have resistance right in this area on the UUP, which is the dollar index we're following. A couple other stocks to watch. Watch Cocoa next week. This is one of my favorites, folks. Cocoa, nice little drop. I mean, this stock has been absolutely demolished. Couple things to go over here, though. Cocoa, big sharp fall. It might have a little bit more downside due to fund selling. A lot of funds can't hold stocks under $5, as well as margin calls going in. But you have to look at this and say to yourself, all right, they have $200 million in cash. They've announced a $200 million buyback, share buyback. The stock is only valued at $400 million in market cap at this point. It's probably a cheap play. They're still going to make about 38 cents to 40 cents next quarter in earnings. It's a $4 stock now. So again, you average that, even if they make $1.25, which would be less than what their projections are in earnings per the next 4 quarters, you're still talking about a PE in the 4 range, 3 range, somewhere in that range. Does seem to be possibly cheap, but what you want to do is just let's watch and see how it plays out. Obviously, for those in the research center, you obviously know what I'm currently doing with it or deciding to do with it or how my plans dictate in the coming week, and we'll continue to update you on that. There's a bunch of other trades that'll be out this week. I encourage you to join that research center, folks. A blowout special there, $49.99 a month. I mean, just to get everything listed on that research center. Hidden gems, daily market report, nightly videos, 30 minutes to 40 minutes every night of analysis. Hot charts and alerts with swing trades posted daily. Pro Trader watch list with our Pro Trader watch list. I mean, it goes on and on nonstop in what's included there. We encourage you to join the research center. All right, folks, enough for this weekend. Enjoy. Be ready for next week. Talk to you soon.